Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far, and hope you're all excited for another beautiful week in the markets. Now in today's video, keep in mind all of the options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. The wheel strategy is a very easy strategy to implement whether you are just starting out on your investing journey or you consider yourself a seasoned veteran of the game. The reason that I like the wheel strategy so much and why I use it with 80% of my trading capital every single week is for the following 3 reasons. Now, number 1, it's a very easy strategy to scale and implement with size. You can scale this strategy up or down, and it doesn't necessarily come with any additional risk in doing so. The reason number 2 that I love this strategy so much is because it's very low time management. It only requires about 15-20 minutes of your day in the mornings, and after that, you are pretty much set. So if you have a full-time job or you're traveling or anything in between, it might be a very decent strategy for you. And the third reason why I love this strategy so much is because it's very consistent and it has a very high win rate. Most of all these trades do have a 90 to 95% win rate, and the ones that you lose, well, you just end up buying companies that you should already love. So for all those reasons, I love the wheel strategy, and in today's video, we're going to be going over a few key things. Number 1, we're going to be going over the expectations for the week. What do we have in terms of macroeconomic events that we have to look out for? Number 2, are there any earnings also in the way that could sway the direction of the markets in the middle of the week? And thereafter, we will also take a look at the price action to derive who's in control of these markets. Obviously, we had a very nice day on the Friday session, and we are going to seek to determine whether or not that can continue into the week, just using some technical analysis on our major indexes. After we're done all that, I will present to you guys the strategy rules that you should be implementing when you are looking to sell puts in the market. A strategy is only a good strategy if you respect all the rules, so I'll be giving you guys a quick rundown of those rules. Number 3, we're going to get into, of course, the top 5 options plays of the week. And after that, as per usual, I have about 10 bonus plays for you, so make sure that you stick around to the end for those bonus plays. So without further ado, guys, let's jump right into the action, shall we? Okay, so in terms of what we have on the table for this week, in terms of what happened on Friday, everybody knows this by now. Of course, it was the Jackson Hole speech with Jerome Powell, and he pretty much essentially said that the Fed may be in a position to cut interest rates as the balance of risks was now shifting from one to that previously was towards inflation, and now the risks are possibly shifting to the labor market. So it opened up the door for a possible rate cut in September, and the rate cut odds for the month of September now stand around 85%, and the markets took that really well. The markets have been waiting for the confirmation of this rate cut pretty much all summer, and this speech, although Jerome Powell did not explicitly say they would be cutting, it did leave the door open in terms of that effect. So in terms of the other things we have to look out for this week, building upon what we had last Friday, there's going to be a few economic data sets that we have to pay attention to. Number 1, of course, the more important one is going to be on Thursday, where we get the Q2 GDP numbers. The numbers are supposed to be about 3%, which is in line with consensus, and that would still show that the economy is somewhat still very strong. And then on Friday, we have the PCE. This is going to be the inflation report that the Fed pays the most attention to, and we will see whether or not it comes in hotter or lower than expected. The consensus estimates are for about 0.3% month over month and about 2.8% year over year. Those numbers are roughly in line with the CPI numbers that we got a few short weeks ago. So these are probably going to be your 2 biggest market moving events, but they do occur later on in the week, so keep that in mind. And in terms of earnings, guys, well, we know that the most of earnings season is already behind us, but this week we have a very big name, and that is, of course, going to be NVIDIA Wednesday after the close. So NVIDIA's earnings are obviously going to impact some technology names, but a lot of semiconductor names overall. So if we are looking to play the wheel on semiconductors this week, we have to be a bit careful, and we do have to play them with some distance because NVIDIA will indeed move that segment in a large fashion. So we also have some earnings from CrowdStrike and a couple other interesting ones. However, the biggest one, of course, is going to be NVIDIA. So that will be a big volatility catalyst coming in Wednesday after the close, which could impact the markets on Thursday. And Thursday, we also have GDP. So Thursday, because of those NVIDIA earnings and because of the GDP numbers, is probably going to be your more volatile day of the week. So please keep that in mind. Now, in terms of the price action, we are actually looking quite good. The bulls fully engulfed our move that we had all throughout the week. We know that we were down a little bit, and then in one single day, we made our way back to the all-time high. So the bulls are still in control of this chart, both on the daily time frame, but also on your larger, longer weekly time frames too. So take a look at this. The bulls are indeed in full control, and as a result, I do still believe that the bias is to the upside, meaning if we get any short-term weakness, it could be a fantastic opportunity to go shopping for some short puts on our favorite companies. If the markets on Monday or Tuesday breach to the upside, that is completely fine. You guys know that when we're looking to sell put options, there are many companies, and not every single company will be green. So there will still be some opportunities, but just keep in mind where we stand in the price action. The bulls are still in control on the SPY and also still in control on the QQQs as well. Although the Qs did not put in such a big engulfing move, they are trying, but just keep an eye on your line in the sand level, 558.54. In the event that somehow we unwind Friday's bullishness into Monday and Tuesday, it will be the start of a daily downtrend, further weekly consolidation. But I just want you guys to understand, right? Who is sitting down here at your former all-time highs? A bunch of bulls. It's going to be very long-standing support for the markets. So in the event that you erode Friday's move into this week, and let's say NVIDIA earnings are not well received by the market, or we get some negative macro catalysts like GDP or PCE inflation is higher than expected, and we start what we started last week, which is a bit of a downswing due to a little bit of sketchy macro data, right? Just want you guys to understand that the bias should still be bullish to the upside moving into our seasonal period of weakness in the markets, which is traditionally the fall, right? August and September are a little bit choppy in the markets, and I will be sitting here with a bunch of sell put orders, not only below the SPY and QQQs, but all my favorite names as well. So essentially what I'm saying is, any forms of weakness that could come into the market this week, if we identify stocks and levels that we want to go shopping at, they could be some very decent opportunities, because we know when we get through this period of choppy seasonality, normally the end of Q3 into Q4, basically end of October into November and December, are a very good period of time for the markets. So that is your market preview for the week. A few key volatility catalysts on the horizon. However, the bias does still remain bullish, and as a result, I will be a firm buyer of any and all dips that we could find on some of our favorite companies. And to benefit or participate in those dips, I will quite frankly just be selling put options under the market, which is why I love this strategy so much. They're kind of just little buy orders that pay you when you sell put options, right? So that is your market preview. Hopefully you guys enjoyed that. Now, in terms of the strategy rules, guys, so these are the rules. Take a screenshot of them because I won't be going through them individually. However, you need to pay attention to every single one of these rules, especially not selling any put options on companies that have earnings this week, and also focusing on very high quality and high conviction companies overall. At the end of the day, guys, if you're selling puts on companies that you don't truly believe in and you get assigned, you'll be wondering why you're holding those companies in the first place, right? So please only run this strategy on high quality, high conviction companies for you. What I will do is I will leave a link down below in the video description. I used to, in former videos, go over these rules every single week, one by one, and spend about 7 to 10 minutes on them. I'm not going to do that anymore just because I want to make the videos a little bit more time efficient. However, please have a look. If this is your first time on the channel and you want a full rundown of the strategy and me to break down line by line why each one of these rules exist and why you should respect them to get the best results, have a look down below in the video description. I'll leave a link to a video on one of our former videos where I used to do these. It's about 7 to 10 minutes, guys. So please brush up on the strategy rules. It'll do wonders in terms of improving your consistency. So now that that's out of the way, let us dive into the top 5 options, shall we? So stock number 1 out of the top 5 options plays for the week, guys, is going to be Walmart. Now, some of the reasons that I love Walmart is because we covered their earnings on the channel and their earnings were quite good. They were absorbing some impacts from tariffs. The management discussion on the earnings call was fairly bullish, not noticing any meaningful weakness across various customer cohorts, and their same-store sales and ticket prices per sale were also higher. So as a result, I do not believe there's going to be a massive destruction in share price, and we can possibly rely on this very key support zone below us, which starts at about 94 and does extend all the way down to 89. This has been a very key area of resistance that the bulls, or rather support that the bulls have pretty much held since the month of April. So it's been about 4 or 5 months that we've been kind of holding on to this one. But since earnings, we've kind of been winding down here slowly but surely. And in terms of short-term conditions, we do have 4-hour oversold conditions, which is very attractive, and 1-hour oversold conditions as well. In the event we get a final push down into here, I'll be looking to sell some puts on Walmart in this beautiful location. And it's coming into the 200-day EMA, which is also right down there at about 92.93. Now, the expected move for Walmart during the week is about $95.10. And you guys know one portion of the strategy rules is to always be selling put options below the expected move of the week. If you don't know where to find the expected moves, you can go to this website right here, barchart.com. Just type it into Google, bar chart, expected move, and then whatever stock you're looking for. Here you can see I have Apple pulled up, and you'll want to look at the expected move, the lower price for the week. So you always want to be writing below that if you want to improve your odds of having a successful trade. So let us go shopping on the options chain together and see, can we find any premium below the expected move of 95, preferably into the 94? So let's go shopping together. You'll see here that I do have my broker up, and we will go shopping for Walmart options below 95, and we'll be looking for 0.5%. That's the ROI target that you're looking for, right? So if we're looking for 0.5%, the 0.5% rule, guys, is very easy. That is your take-home pay for the week. If you're always making 0.5% per week, you're making very good ROI. But after years of doing this, guys, this is the sweet spot for me. If you go too close to the market, your risk of assignment is too large. And if you go too far away, you're just not making good enough ROI. So my rule is the 0.5% rule. What does that mean? Well, you're just looking for half of this strike price in cent increments. It's very easy to go through many stock, many options prices at the same time, many different options chains, if you're just using the 0.5% rule. If you want to know what the 0.5% rule should be here at 95, it is half of 95, which is about 47. Just do the math in your head. And you want to see about that in cent increments. If you want the proof, we can do it on the calculator. 0.47 divided by 95 would be roughly 0.5%. As you can see, unfortunately on Walmart, there isn't enough premium here just yet, which is why we will be looking on Monday or Tuesday for a slight decline on Walmart. Now, if on the Monday or Tuesday session, this stock is down by 1% and really comes down into the expected move, well, not only might we be able to find the 95 strikes, we might even be able to find the 94 strikes. So obviously you want to be dynamic with your strike prices. Follow the market down and just make sure you are getting 0.5%. For me this week, I'll be looking for the 95 and 94 strikes, both of which are very close and into our key support level that we've been holding since the month of April. That is it for stock number 1. Stock number 2 is going to be Apple. So Apple, phenomenal stock, and they will be releasing the new iPhone 17 and a whole suite of other products come early September. That being said, there's a few key reasons that I do enjoy playing Apple here. Number 1 is because Apple has been lagging the markets year to date. Year to date, Apple is still down roughly 9%, so it has a bit of catching up to do. The bulls started that action about a few weeks ago, and now we're kind of just consolidating, but it looks very good. This is a huge level right here, guys. It's been a level that's been kind of troublesome for the bulls a couple times. Resistance here, once they broke through, it was support, and when they broke back down through with tariffs, you can see how many times over the past 3-4 months, this area has acted as resistance. So now that we're pulling back down into this location, I want to try and sell some put options below here. Apple had some great revenue, the best revenue actually that they've posted in a quarter since 2021. That was 10% year over year. And with their new suite of products coming out in the fall, I am very bullish on this company, willing to play this one for a bit of a catch-up trade. So the whole time that it stays down here, I do not mind selling put options on this company. The expected move on Apple for the week is 222.23. But if you ask me, I'd like to be closer to 220. 220, 217.5. Let's pull up the options chain together and see, can we go shopping for some Apple puts in my desired location, 220 or below? So if we're looking for the 220 strike, you'll be looking for 0.5%. Just do half of 220 in your head. That should be about $1.10. So you're going to be looking for $1.10 on the bid right here. As you can see, there's not that yet, right? So what we do need to see on Apple is a bit more of a decline. If I can start to see $1.10 here on these bids, I will be willing to participate. And obviously, if Apple has a pretty bad day on Monday or Tuesday and drops like 1% and comes into the expected move, comes lower to 25, to 24, to 23, something like that, well, you guys know exactly what's going to happen. You will find your required premium here at 220, but maybe you can even find it at 217.5. So these are the two strikes that I'll be looking to play Apple on over the course of this week, whether it happens on Monday or Tuesday morning. That would be probably your best bet for Apple, and that is going to be trade number 2 for the week. Trade number 3 is a company that you guys also know very well, and that is going to be Hims. So Hims, unfortunately, recently has been unwinding after their earnings, as there are some concerns around their GLP-1 compound drugs, and also there were some reports that were published in terms of the erectile dysfunction segment of the business was just not growing as well this past quarter as it has been in the past 2-3 years. That being said, Hims has a very wide array of products, but unfortunately, it's just been caught in a bit of a downdraft in terms of negative sentiment. That being said, Hims is coming into a very juicy level, in my opinion, which would be the mid to low 30s. So the support is not quite here yet. We are kind of halfway into it. We're not quite daily oversold, but any single push a little bit further could just send us into the territory that we want to maybe acquire some of this stock, if this is a stock that you do enjoy playing. Now, the expected move for Hims on the week is 41.83. If we look down here at about $45, the valuation is far less commanding than it was all the way up here. You can see they're currently trading at a forward price to sales of about 4.27, which really is not that bad. And as a result, if I can find some action here under 40, preferably the mid to high 30s, the valuation will get even better, even more manageable. And I really would not mind being assigned some shares down there and starting a bit of a position for the wheel. So let's go shopping in terms of under the expected move. The expected move for the week is 41.83, but Hims has some pretty good volatility. Let me show you what I mean. You can actually get pretty decently under the expected move for the upcoming week. If we are looking for the 0.5% rule around the $40 range, well, half of 40 is roughly 20, and as a result, you should be looking for about 20 cents on the bid. As we can see right here, we do have it at 39.5. That is well below the expected move, right? Even 39.5, a move to 39.5 from here, let's say, would be a pretty big sell-off on Hims from now until the end of the week. We'd be talking about 11.5%. However, if it starts off the week red Monday or Tuesday and comes down into the expected move, we might be able to get even better locations, talking about maybe 37.5, 37, 36.5. So for me this week, what I'll be looking for is I'm going to try to get as deep as possible, guys. 38 down to 36, as close as possible to this support. Unless Hims has a very red day on Monday or Tuesday, you're probably not going to be able to get the actual support location, which is 35, 34, but 37, 36 is a nice little pocket and does represent some pretty good distance here from the Friday close. If we can get in the 37s, that'll be an intra-week sell-off of about 16%. And as a result, I do want to play this company if they do offer me the opportunity. That's it for stock number 3. Stock number 4 is another stock that you guys know very well, and that is PayPal. And we've been kind of playing PayPal on and off on the channel for a better part of the last month, ever since they've had their earnings report and kind of slid back down into this very attractive area, which, to be quite frank with you, is 3 years, guys. 3 years worth of support at the lows. Now, PayPal did not have bad earnings by many metrics. In terms of the valuation here at the low 70s, you're looking at a forward price to earnings of 13.5. You're looking at a forward PEG of 1.13 and a forward price to sales of 2.12 with a free cash flow yield of 9.35. Any metric that you choose to run on this company would show that the company is trading fairly cheap right now. In combination with this very wide support area, 2-3 years of support to be precise, does line up some nice confluence for some trading action, especially around the 67-68 zone. That being said, the expected move on PayPal this week is 68.14, and although they had a very nice push on the Friday session, if we get any early week weakness, well, we may be able to play this bottom location that the bulls have been holding up ever since that earnings drop kind of stopped around the 67-68 range. The expected move 68.14. Let's go have a look. Can we do some shopping on PayPal and find a 68 or a 67 strike? Let's have a look. So for the Friday expiry, we'll be looking for 68 at a first glance. Half of 68 is 34, so you'll be needing to find 34 cents on the bid. And as a matter of fact, we are finding it. As you can see, 33 to 35 cents. That would be a nice trade that would respect the 0.5% ROI rule that we're looking to go for. But you guys know the drill. In the event you get a drop on Monday or Tuesday, you may be able to get an even deeper strike. Think of the 67s or the 66s. Myself personally, I would not mind to play either one of these three strikes, 68, 67, or 66. And obviously, guys, if PayPal somehow falls like 2-3% on the Monday, and you can find an even better strike like 65, well, by all means, right? As deep as you can get in the support range would be the best for you. I would not mind playing 68 down to 66 myself. Pretty decent area, decent valuation, and we know that the bulls have acted in a nice fashion as support this entire time. So relatively cheap company, all things considered. That's stock number 4. And now finally for stock number 5, this one comes with a big asterisk. It is Micron. However, as I told you before, we have NVIDIA earnings on Wednesday. NVIDIA earnings will move the entire semiconductor landscape. So rather than playing Broadcom super high up here, right, or other names that might be really, really, really high, I want to play Micron because Micron is still relatively close to a very wide area of support. Now, this play is not going to be for everybody. If you guys just don't want to play it at all because NVIDIA has earnings and it stresses you out, I would completely understand. Just don't play this one. But for all of you who are looking for a semiconductor play this week, my favorite one all across the board is probably Micron. Number one, because of the massive support range that we do have. You can see this is a very large area where the bulls struggled with support and resistance for a very long time. When you break down under it, it's tough to get through it. And when you break above it, it's tough for the bulls to unwind any further than that. They usually put up a pretty good fight down there. That whole area is about 110 down to about 100. This $10 range, all of the weekly EMAs are sitting right there too. And in terms of the monthly, guys, we have a very nice monthly engulfing move, and now just possibly looking for a bit of a back test. In terms of valuation, around 110, you're looking at a forward price to earnings of 14, which is very low, a PEG ratio of 0.53, and a price to sales of 3.18. This is one of the cheapest companies in the entire semiconductor landscape right now, and the forward revenue and EPS growth profile is very attractive. So I do want to keep playing Micron for as many times as I can as it stays low in terms of price and it stays low in terms of valuation close to our support location. The expected move for the week is 112.86. Let us go shopping on Micron to see what can we possibly find on Micron down there. So if we're looking for the 0.5% rule around 110, you'd be looking for half of 110, which is roughly 55. So let's see where that is. As a matter of fact, it is almost at the 110 strike. You can see the bid here is 47 and the ask is 54. Very close, meaning that in the event that you get some drawdowns here Monday or Tuesday and you wanted to participate, if Micron drops from where it is right now down to 116, 115, 114 early in the week, well, you might get blessed with a strike 110 or lower. If you're asking me my desired strike for this week, guys, well, it's 110 all the way down to 106. As low as I can possibly get with some early week volatility, so keep that in mind. I would not mind a 110, but I would much prefer being at 108, 107, 106, so keep that in mind. I will probably be looking to play a bit of Micron this week in the event we get some early morning volatility, and in the event that NVIDIA sends us lower, at least I know I'm getting Micron at a fantastic price, very close to the 200-day EMA, and buried into this very large support area that the stock has performed very well in when we come down into it. So that is the top 5 options plays. Hopefully you guys found some ideas from those plays. And now is going to be the time where we cover some bonus plays. So keep in mind the bonus plays, it's not because they're not as good as the top 5. It's just because sometimes they're more volatile. Now, that being said, for the bonus plays, I won't be giving you guys the expected moves. You guys can do that on your own. You're now professionals. But what I will be giving you, of course, is the area in which I would be looking to play these companies. So let's get into the 10 bonus plays, shall we? So we're going to divide them into 4 key sections. Number 1, I'll be giving you guys some growth plays. Number 2, I'll be giving you guys some value plays. Number 3, we'll be looking at some plays for small accounts for stocks with small share prices. And number 4, we'll be looking at some plays for big accounts, so stocks with very large share prices. So that being said, let's jump right into it. In terms of the growth stocks, number 1, of course, is going to be a weekly recurring bet that I like to make with the markets, which is going to be SOXL. But keep in mind, guys, SOXL, you can play it with some good distance. You do not need to play it too close. Now, this one will move with NVIDIA, so you do want to be lower than not. SOXL is based on the SOXX semiconductor ETF. And as you can see, this ETF is currently sitting above a very wide area of support, 236 down to about 213. The lows of the stocks right here are the lows of SOXL, which are synonymous right now with about $23. So if I'm looking to play this one with a bit of space because of NVIDIA earnings, we know the volatility is going to be a bit higher, I'll be looking for 23 and below. As you can see right here, at 22 right now, there's about 9-10 cents, which is roughly 0.5% for the week. If we get some early week volatility and the semiconductor index slides a little bit, you might be able to find a 22, 21.5, or 21 for a bit better premium. Don't play this one too heavy though. The way that I play this is I play a couple contracts here, and then if it comes down assigns me, I'll play a couple more and DCA a position all throughout this SOXX big support range, as we don't know where they're going to stop the price. All we know is that this very wide area will be acting as support. As a result, I play my contracts in two parts. Some here, then if we drop, I'll be targeting a little bit lower. So play with some distance and don't go all in at once. Play number 2 is going to be SoFi. So SoFi cracking above this very beautiful area that used to be resistance, but now is going to be acting as support. It was a very large level for the bulls, but I do not want to play this one too close. I'll be looking for pullbacks. If I can find pullbacks on SoFi and possibly get some contracts into the $22 to $20 range, this is the pocket that I'll be looking to play. The pocket that the bulls have been defending for a better part of the last 1.5 months, ever since they released earnings. SoFi is a fantastic company. I own some long-term shares, and I would not mind playing this pullback, as now the bulls have captured the overhead resistance area, have turned it into support, and as a result, if we have a quick and sharp pullback into it, it could be a nice opportunity to farm below that whole support range. That's stock number 2. Stock number 3 is going to be BITX. This one is based, of course, off of Bitcoin. The reason I like playing this one, guys, is because Bitcoin is coming into a very juicy level right now. You can see that as I'm recording right now on the Sunday session, it's down about 3%, unwinding a lot of the Friday move. Now, we know that the bears have been in control of this one. They backtested resistance, and now apparently they want to go for a bit more daily downtrend slide. What that translates to on the weekly is just a nice, healthy weekly retracement, and it plays into the larger monthly consolidation move. We have a massive area of support. Prior all-time high resistance. It was also resistance here before we broke through it. So now if we come to backtest this location, I want to be selling puts into this location down there. This location, this whole 108 down to about 100K on Bitcoin, translates to roughly a low 50s on BITX. As a result, you do not need to play it too close. So the strikes that I'll be looking for this week will probably be low 50s, as low as I can get, which will ensure that I'm going to be getting the best possible price on this Bitcoin pullback in the event that I do get a sign, as the long-term bulls are still in control of this trade. And any weakness that we can have over the next weeks, possibly, I do believe it will result in a very nice buying opportunity. So I do not mind being assigned. But once again, since it's a 2x leveraged product, right, you want to be playing it with some distance. And the last stock as part of some growth names right here is going to be CoreWeave. So CoreWeave coming a little bit higher on the Friday session. Some of the concerns around this stock, of course, is their debt load, which I think is going to, a lot of people will have some bullishness coming into CoreWeave in the near-term future, because now with rates possibly coming down, it lightens the burdens in terms of their refinance profiles over the next few years on all of that debt that they're using to grow the business. That being said, CoreWeave right now is sitting at a fairly cheap multiple in the low 90s. We're talking about a forward price to sales of next year of about 9.25. That's not too bad for a tech stock, but if you know how much they're growing revenue, guys, and they're growing revenue by a lot, 70% per year on average for the next 3 years. That's 128% next year, 45% in 2027, and then 38% into 2028. Obviously, the law of large numbers is catching up to them. But what that means, guys, is they're going from a revenue profile of right around 5 billion next year into 2028, 24 billion. And I ran some valuations after their earnings. The base case scenario, if the market gives them a 10 price to sales by 2028, you're looking at about almost $500 per share. That's the base case. If they just hold the current price to sales multiple that they have, you might have a bear case scenario, and that's fine. Bear case scenario would put them at about a 5 price to sales, which is very cheap for a tech company, especially a fast-growing one. And even at that, by 2028, a bear case scenario would give them a $120 billion market cap, which would give them about a $246 per share price, right? So not too bad. The upside is pretty good on CoreWeave, and as a result, I think people will be coming around to that shortly. But we know the sentiment has been quite bad on this stock. As a result, the way that I want to play this one, because we see there's not much support, is there? No. So we have to be playing this one with a bit of momentum and a little bit of volatility. Essentially, you want to be trying to get as low as humanly possible on this option chain while still getting 0.5%. As you can see, I can go all the way down to an 81 strike for Friday and still get 0.5%, right? That's a good amount of distance. If CoreWeave is red on the Monday session, you might be able to get even better. 80 down to 75. From the current price, that will be a sell-off of another 15 all the way down to $75. 15 to 19% in a single week. I would be a big fan of picking up some shares on CoreWeave there because I do believe the valuation is pretty good. That being said, it does not respect our support rules, so make sure you're playing it with some very good distance. Those are the 4 growth stocks or growth names that I wanted to bring to you guys. In terms of the 2 value names, we'll be looking at a couple right now. Number 1 is Nike. I enjoy playing Nike down here in the low 70s. In the event we find a retracement, I probably will be playing this stock down here. Nike is in the middle of their turnaround story. The valuation into the 70s is not terrible, but the reason I like playing this one, it was support for a while earlier on this year. It was the COVID bottoms and the bottoms of December 2018 when tariffs were another problem for Nike back then. That being said, any pullbacks, in my opinion, would be a good opportunity to kind of play Nike, as I do believe in their recovery story. New CEO seems to know exactly what it takes to get this company back on track, which is focusing on more large sports sponsorship deals and kind of rekindling their partnerships with a lot of the wholesalers that they left behind in the last few years under the former CEO. The other company in terms of a value play that I'd be looking for is CP. This one, very solid company, railroad company, of course. It is pretty much a duopoly with Kansas, it has Kansas City Rail, which it acquired, and there's only a very few amount of railroad companies, guys, that operate in North America and Mexico combined, and this is one of the largest players in the game, Union Pacific being the other one. You can see clearly that we have 4 years, guys, 4 years of support. What has the company been doing during that 4 years? The share price hasn't been moving, but what has been moving is their fundamentals. Their EPS is getting widely better over the next few years, and the revenue is getting incrementally better as well. So although the stock price hasn't moved, the fundamentals are improving, and as a result, there's a bit of a disconnect here between the stock price and the fundamentals, and that is an area that I would want to play. However, keep in mind that CP only has options on a monthly basis. So the next contract is for September 19th, 26 days away. As a result, you'll have to look for 3 weeks of premium. And as a result, you'll be looking for 0.5% per week. So that being said, if I can find roughly, I don't know, like $1.30, $1.40, right, which would be kind of 2% at the 72.5s, I would not mind playing either the 72.5s or the $70 strike. Just something to keep in mind if you guys enjoy playing longer dated contracts on value companies. This whole 72 down to 67 region has been strong support for the bulls every single time over the past 4 years, and I do not really expect that to change, especially since the company is improving fundamentals. Those are your 2 value stocks. Now, some small account names, for those of you guys that don't have very big accounts, you might consider this one, New Holdings. We covered their earnings just about a week ago at this point in time, and we derived that the base and bull case scenarios for upside in this stock are very healthy, right? In terms of the scale at which they're growing revenue and EPS, very fast. Revenue growth for the next couple of years is 25% per year, and EPS on average is 35.5% per year. Right now at $13, the stock is trading relatively cheap, forward multiple of about 23, and a forward PEG ratio of about 0.642, which is very solid. As a result, if New Holdings comes back down from 14 down to the low 13s, I'll be looking to play 13 and then possibly more at $12. I really like this big wide range of consolidation. I mean, now it's into resistance, of course. Come down there, I'll play the top end of it, and if we come back down to support, I'll play more contracts down here. New Holdings has really not been doing much of anything over the past year, but what they have been doing, similar to CP, they have been improving fundamentals by a wide margin. Look at the ramp on EPS, look at the ramp on revenue as well. As a result, the whole time that it stays down here, I will probably want to play. And the other stock, if you have a small account that you might want to consider, is Oscar Health. So Oscar Health, we've been playing it pretty much on and off for a better part of the last month, month and a half on the channel. Every time it starts to offer under 15, talking about 15 down to about 13, 12 is a very nice pocket. This has been very nice support for the stock for a better part of the last year, year and a half. The fundamentals are improving, and they're part of the entire healthcare insurance segment, which has not been getting that much love. But of course, now with Warren Buffett's investment into UNH rekindling some of the love for this entire sector, I do expect that the bias will be shifting from one of bearish sentiment slowly but surely over to one of bullish sentiment as well. So the entire time that Oscar Health remains down here, you can find some pretty attractive premiums, 15 down to about $13 on any early dips throughout the week. And I will be playing this one again if I get the chance this week too. That's it for the small account stocks. Now for the big account stocks, number one is going to be Equifax. So Equifax for a few key reasons. Number one, phenomenal support down here, guys. 240 down to 220. This has been a long-standing area of support. Big resistance previously, support during the tariffs, and now support again. The stock has not been doing much of anything, virtually, let's just say for the past year and a half at this point in time. And the valuation down here around 240 is also not terrible. The monthly is not looking bad. Even the longer time frames, you can clearly see that well-established support. And Equifax has a bit of macro tailwinds behind it. Obviously, you guys know, what do? Well, they do credit services, right? So that being said, the macro tailwind is rates coming down. People might need more credit checks, which is also a shout out to FICO, but Equifax is also a very large player in that game. As a result, with the macro tailwinds of rate cuts, possibly stimulating people to go out for more financing, mortgages, car loans, furniture financing, electronics financing. Every time that somebody needs one of those, they need to have their credit scores ran and monitored, which does bring in some incremental revenue from Equifax. This company has other lines of business, of course, but the credit business is one of their largest. And as a result, I do think those macro tailwinds will have a good job in protecting our share price above our area of support. So if it does come down there, I might even consider playing this one with my own large account. The other stock we're going to be looking at, guys, is CRM. Now, CRM has been down and out, and just keep in mind, this one does have earnings, not this week, but the week after. So you have to be a little bit cautious with this one. However, I do still want to consider playing it. That being said, we're in very nice area of support right now, guys. It was the July 2024 lows, the tariff lows, and now the lows most recently. We know that software has been largely out of favor for the markets for quite some time right now, but I do believe that there is starting to be a bit of a shift, especially as of last week, as the market continues to broaden out a little bit. That being said, if we get some early morning weakness on Monday or Tuesday, and I can find some strikes down here, let's call it under 230 or close to 230 lows, I would not mind playing this one as well. But if you just do not want to play it and you would rather wait for earnings, maybe, if you have a theory that you could get a lower strike price, 215 and 200, no problem at all. Leave it on your watch list coming into next week, and maybe you might be able to play it down there. For CRM, you'll have to give me a very good early week dip for me to play a very low level, right? And in order to get the best available price and the best available premium. So please keep that in mind. Those are all the plays that I have for you guys today. Hopefully you did enjoy them. If you did, consider dropping a like on the video. Would really appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these videos every Sunday in preparation for the upcoming week. And last but not least, if you have any questions on the strategy, please feel free to leave them down below. I will answer them tonight and help you guys as much as I can for the upcoming week of trading. Now, last but not least, in the event that you guys wanted to join a Discord, our trading and investing community Discord, as a matter of fact, where we excel at trading the strategy. We do it every single day. We sell a lot of premium in the markets, but not only that, we also do many other strategies such as call options, call debit spreads, swing trades with shares, and also build very solid long-term portfolios. As I always tell you guys, you should have two portfolios, a trading portfolio and a long-term investment portfolio, really to get the best out of the markets right there. If you did want to join our Discord, you'll have access to all of my trades in real time. So every week I do a recap of our trades. You can see the wheel trades right here. I'll just scroll through a lot of the trades that we've been taking in the past few months. You can see there's a lot of wheel trades. There's a lot of directional trades too, right, that we also play with different strategies. And overall, it's a very consistent strategy, especially in terms of the wheel or other strategies that I do use. You get access to all my trades in real time. You also get access to our private morning live streams. Every morning, Monday to Friday, for about 2-3 hours at the open, I trade live with you guys, but also take all your questions on your stocks, your options, or your long-term portfolios. It's a great place if you want to interact with me one-on-one and learn a bit more about essentially anything that you want, right? Stocks, options, or anything in between. So that being said, if you can't be there, they're recorded, so feel free to watch back. You can also ask me all your questions in our chat rooms all throughout the day. I'm very fast to answer. You get access to our educational section too, where I go through videos about technical analysis, fundamental analysis, various trading strategies that I don't so much go over on the channel, such as call options, debit spreads, credit spreads, all that good stuff. Videos on how to grow your account, whether you have a small, medium, or large account, which strategies should be utilized by yourself to get the best risk to reward trade-off. And last but not least, you get access to all my watch lists and all my charts. So in the event that you enjoy my seeing my support and resistance levels and my earnings rundowns, and you want all the watch lists that I use to trade the markets every week, it's just an added benefit. You can just copy paste everything that I have and they become yours. So that's pretty much everything that I had for you guys. If you wanted to join the Discord, as I said, our link is down below in the video description. Hopefully I see you guys in there soon. And if not, I will see you right back here on the channel. That's it for me. Have a beautiful week in the markets, guys. Take care. See you in Monday's recap video. Peace.